Welcome to our channel. Today,
Bitcoin.
we'll simplify 38 essential cryptocurrency terms, providing a solid foundation for beginners and those brushing up on their knowledge. Join us to confidently explore the future of finance and technology. Number 1. Cryptocurrency. It is a digital or virtual currency that uses cryptography for security. 2. Blockchain. A decentralized ledger of all transactions across a peer-to-peer network. 3. Block. Blockchains are built up of a growing list of transactions, which are formatted into blocks. Each block contains a cryptographic reference to the last, making it impossible to change the history of the blockchain. 4. Bitcoin. The first and most well-known cryptocurrency was created by Satoshi Nakamoto. 5. Altcoin. Any cryptocurrency other than Bitcoin. 6. ATH, short form of all-time high, and ATL, short form of all-time low. This refers to the highest or lowest the price has ever been for a given asset. 7. Bull market. A bull market describes the phenomenon where market prices are generally trending upward over a given period, and public perception is positive. 8. Bear market. A bear market is the reverse of a bull market, where outlooks are negative as market prices seem to be on a downward trend. 9. Smart contract. Self-executing contracts with the terms of the agreement directly written into code. For example, a smart contract could automatically release funds from an escrow account once the terms of a sales agreement are met. 10. Wallet. A tool in the form of hardware or software used to store cryptocurrencies. 11. Cold wallet and hot wallet. A cold wallet is an offline wallet used to store cryptocurrencies for long-term holding. For example, a hardware wallet like Ledger or Trezor. A hot wallet is an online wallet used for everyday transactions. Examples include mobile wallets like Trust Wallet, MetaMask, or Phantom Wallet. 12. Public key and private key. A cryptographic key that can be shared publicly and used to receive funds, and a cryptographic key that is kept secret and used to access and manage your cryptocurrencies. 13. Mining. The process of validating and adding transactions to the blockchain. Miners use powerful computers to solve complex mathematical problems, and the first to solve the problem gets to add a new block to the blockchain and receive a reward. 14. Fundamental analysis, a method of evaluating the value of a given asset, as well as estimating its future performance. In the context of crypto projects, it takes into account such factors as the technological and innovative value of a product, the team behind it, the partnerships or the token distribution model, and its use cases. 15. TA or technical analysis. Technical analysis refers to the process of studying price charts and using various market indicators to determine the state of the market. This is a deep area of study for expert traders who aim to use technical analysis to their advantage when trying to predict future market movements. 16. Node and ledger. A computer that participates in the cryptocurrency network by validating and relaying transactions, and a ledger record of transactions. 17. Decentralization. Distribution of authority and control across a network rather than a single entity. For example, Bitcoin's network is decentralized because no single entity controls it. 18. Exchange. Platforms where you can buy, sell, and trade cryptocurrencies online. 19. ICO, short form of initial coin offering, and IDO, short form of initial DEX offering. A fundraising method where new cryptocurrencies are sold to early backers. An initial DEX offering, IDO, is a fundraising method where a cryptocurrency is launched on a decentralized exchange in short DEX rather than through a centralized platform. 20. Token. A digital asset issued on a blockchain often represents a utility or asset. 21. Stablecoin. A cryptocurrency pegged to a stable asset, such as fiat currency, to reduce volatility. For example, Tether, short form of USDT, is pegged to the US dollar. 22. Fiat currency. Government-issued currency that is not backed by a physical commodity, like the US dollar, euro, or pound. 23. DeFi, short form of Decentralized Finance. Financial services built on blockchain technology that operate without traditional intermediaries, like banks. For example, Uniswap is a decentralized exchange that allows users to trade cryptocurrencies without an intermediary. 24. DApp, short form of Decentralized Application. An application that runs on a decentralized network. For example, CryptoKitties is a game that runs on the Ethereum blockchain. 25. HODL, short form of Hold On for Dear Life. A slang term in the crypto community means to hold onto your cryptocurrency rather than sell. 26. Crypto trading signals. Crypto trading signals are indicators or suggestions generated by analysts or algorithms to inform traders when to buy or sell cryptocurrencies. On this note, let us introduce you to Bull Crypto Signals, a platform that provides highly accuracy crypto spot signals. You'll get advanced market updates, personalized account access, WhatsApp support, and a mobile app. All this comes at an amazing price of just $8 a month. Don't wait, grab your chance now. 27. Whale, an individual or entity that holds a large amount of cryptocurrency, enough to influence the market. 28. Market cap. The total value of a cryptocurrency is calculated by multiplying the current price by the total supply. For example, if a cryptocurrency has 1 million coins in circulation and each coin is worth $10, the market cap is $10 million. 29. FOMO, short form of fear of missing out. The anxiety that an investor feels when they think they might miss out on a profitable investment opportunity. 30. FUD, short form of fear, uncertainty, doubt. Negative information spreads to create fear and uncertainty among investors. 31. Gas. A fee is required to conduct transactions or execute smart contracts on the Ethereum network. For example, executing a smart contract might cost 0.01 ETH in gas fees. 32. Halving. A reduction in the reward miners receive, which happens periodically in the Bitcoin network. For example, Bitcoin's mining reward was reduced from 12.5 BTC to 6.25 BTC in the last Bitcoin halving event 2024. 33. Liquidity. The ease with which an asset can be converted into cash without affecting its market price. 34. ERC20. A standard for tokens issued on the Ethereum blockchain, ensuring compatibility and functionality across the ecosystem. Examples include USDC and Chainlink. 35. Burning. The process of permanently removing some coins or token of a cryptocurrency from circulation. For example, Binance periodically burns BNB tokens to reduce supply. 36. Airdrop. The distribution of cryptocurrency tokens for free, often as part of a marketing campaign. For example, new projects might airdrop tokens to users who hold a certain amount of another cryptocurrency. 37. Staking. The process of participating in a POS-based blockchain by locking up a certain amount of cryptocurrency. For example, staking ETH in Ethereum 2.0 to earn rewards. 38. KYC, short form of Know Your Customer. A process used by exchanges to verify the identity of their users. For example, providing identification documents to open an account on Coinbase. And that brings us to the end. Don't forget to like, comment, and subscribe to Bull Crypto for more exciting content. Thank you very much.